Hey listeners, I just hosted Dan Kang, head of investor relations at DeFi Development Corp, on the pod. This has been a highly requested episode as there are now a number of public companies, including DeFi Dev Corp, that are acquiring Solana in their treasuries, creating something like MicroStrategy for Solana. DeFi Dev Corp came on the scene around 2 months ago and quickly acquired Solana worth over $100 million, while convincing the market its shares are worth more than their underlying SOL. I thought Dan did a good job candidly answering a lot of my questions about this trend, and I really enjoyed the episode. I hope you do too. We're coming up on Permissionless 4, happening June 24th to 26th in Brooklyn, New York. It's the premier conference for crypto builders. Whether you're building on Solana, trading in the trenches, or just curious about DeFi, you won't want to miss it. Mert and I will also both be there. We'll be hosting a Lightspeed pod meetup at a bar, and I'd love to meet some of you in person. Ticket prices will go up, so snag yours early and use the code Lightspeed10 to get 10% off at checkout. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm Jack Kubinek, your host, joined today in the studio by Dan Kang, DK, head of investor relations over at DeFi Development Corp, one of the interesting new companies in the Solana world. So I'm excited to hear a little bit about what you guys are running over there. And Dan, thank you so much for joining me today.
Yeah, thanks for having me. Really excited.
So DeFi Development Corp is a company that I've been hearing a lot of buzz about. I guess it's been it's kind of a MicroStrategy-like company on Solana. It was a real estate software firm kind of called Janover that some ex-Kraken guys acquired a majority in and have turned into kind of a Solana Treasury company. In a little over 2 months since launch, I believe, you've acquired 609,000 SOL, which is many millions. I don't know the exact math there, but
105 million.
Over 100 million. Yes.
Based on this morning's price.
So we had you in the newsletter this week because I was like, you crossed 100 million. Did you celebrate? And you said, no, you didn't really celebrate the 100 million milestone. But with that throat clearing out of the way, Dan, I'll just ask you off the bat, what is the DeFi Development Corp playbook? Why is this stock valued as highly as it is? What's the business model? Just give us the general overview.
Yeah. Again, thanks for having me on. So we like to think of ourselves as the fastest and most efficient way to accumulate Solana. And I would actually flip the question on its head a little bit, which is like, why is it valued as high as it is? I can't explicitly comment on, whether we are under or highly valued, but I think the value proposition for a crypto treasury play more broadly has to do with speed of accumulation. So the problem isn't so much that investors can't go out there and buy SOL themselves or, buy eventual SOL ETFs or anything like that. It's that they can't accumulate exposure fast enough. So I like to think of maybe an ETF as like riding a raft on a river. Kind of go with the flow, but you don't really have direction or control or ability to really accelerate into that. And what we're trying to do at DeFi Dev Corp is provide investors with a speedboat on the river. So you're not just going with the current, but you're getting to that destination a lot faster and a lot more efficiently. I think a crypto treasury company in general is just a company that is trying to put a particular crypto asset or combination of assets, the vast majority of its treasury into those assets. So as an example of something that's not a crypto treasury company would be a company like Coinbase. So if you look at Coinbase, most recent quarter, they reported they've got roughly, call it $12 billion of total available resources to them, mix of cash equivalents, and whatever have you. And about $1.3 billion is in cryptocurrencies, a mixture of Bitcoin, Ethereum, and they have this like all other bucket. So call it 10% of their total available resources, give or take, is inside of crypto assets. That's not a crypto treasury vehicle, right? They're obviously, they're an exchange. They have a whole host of services from trading and custody and, a bunch of other services that prevent them from going and putting, say, like 90% of their balance sheet into cryptocurrencies versus a crypto treasury company. When done right, the vast majority of its assets go into the underlying asset. So for us, the vast majority of our treasury is in Solana, and our intention is to acquire it to infinity, as we like to say, as much as the market will allow us.
Mm-hmm. And when you think about these like Michael Saylor-esque strategy plays, the two, I guess, important factors to think about are NAV and volatility. So we know that at least for strategy, a lot of the buyers are hedge funds, which may or may not be interested in the underlying Bitcoin, but they really like the volatility that they can get from these convertible bonds that MicroStrategy is issuing. The other point is that MicroStrategy trades at a premium to its NAV. So the shares are worth more than the underlying Bitcoin. And DeFi Development Corp trades similarly. On your website, you list the volatility is 700%. I'm not entirely sure how that's calculated, but seems quite high. And then MNAV, so the ratio of market cap to NAV, is 1.8. So it trades at 1.8 times the underlying Solana.
Yeah.
So how do those two pieces factor into the business model at DeFi?
Yeah, they're really important. And I'll actually start with the multiple to NAVs. I think it's a really important concept for investors to understand. And frankly, when I was first joining the team, and I've known Joseph and Parker for many years. We worked together at Kraken, and we like to say like, oh, the interview process was so short for Dan. Like he interviewed him on a Thursday and he was in on Friday or something like that. But then I always tell people like, I had a 3-year interview process with Joseph, our very own Solana Jesus, where I worked with him so closely. So I was really excited when he asked me to join. But the thing I had to wrap my head around was that these NAV premiums that exist, 2x, 3x, sometimes as high as like 5 or 7x on some of these vehicles we're seeing, actually are not as irrational as they seem on the surface. And the analogy that I've been giving to TradFi investors to help them maybe understand this a little bit more is to just look at a traditional equity like, say, Microsoft or Meta. You wouldn't look at the value of its balance sheet cash and say, well, it's 10% of the market cap. The thing's at 10x NAV. Let's short Meta and Microsoft because, it's got to compress down to the value of its cash. You're not just paying for the cash as an investor in those companies. You're paying for future earnings accumulation, right? I'm paying for whatever they're going to earn in free cash flow or earnings per share in the following year. Treasury vehicles are more or less the same, right? You're not just paying for the holdings that exist today, but you're actually paying for that company accumulating a certain amount of whatever crypto asset it's going to accumulate in the future. So when we look at our own MNAV, there's obviously some embedded value that the market is giving us for continuing to acquire Solana on a per share basis going forward. So in that light, if you actually went and ran the math on, let's say, MicroStrategy, for example, the underlying multiple that is implied by the market on just its future Bitcoin accumulation, I think last I checked was somewhere around 4 or 5x. Just this complicated math to get into it. And you compare it to a company like eBay, which doesn't grow earnings per share, is this legacy business that obviously got clobbered by Amazon, and is traded around 12 times forward earnings, for forever. And they only really grow EPS through buybacks and things like that. So in that context, when you compare those versus a company that's acquiring an asset that is outperforming the S&P, outperforming most of the Magnificent Seven stocks, in some ways, again, I can't comment on our own equity, but I can comment on MicroStrategies. You might look at those NAV premiums and say, maybe they're actually due to increase rather than compress.
I think my response a little bit to the comparisons to these tech companies, Meta, Microsoft, eBay,
Sure.
is you're trading on earnings, which are a real thing you couldn't get exposure to in any other way. But with DeFi Dev Corp or strategy, you could go and buy the Solana and stake it, or you could go and buy Bitcoin. So that's a little different, right? You're offering a vehicle for an asset that people could also just buy in a wallet or something like that.
That's fair. But again, I think this goes back to the original point of, yes, investors can go and put their own little floaties or life rafts onto a river. But it's pretty complicated to build an engine with a very complicated speedboat and really take that down the river in a fast way and navigate all the obstacles that are coming your way. So stepping away from the metaphor for a second, a really good example of this is the fact that we, run our own validators. And, Parker White, our COO, has a lot of experience running his own validators for quite some time. And, the average retail investor probably wouldn't know how to go and set that up and go and enhance yields versus what they can get on, say, a Coinbase, for example. So if you were to just compare our yields versus a lot of the different centralized exchanges out there, we're able to offer, somewhere around 20 to 40% higher yields versus a lot of the different centralized exchanges. Call it like 8% versus Coinbase average is like 5 to 6% or something like that. So that's one example of like our crypto expertise coming into play and providing what I say like is enhanced Solana accumulation in a way that ETFs and just buying on your own simply, doesn't quite cut it.
Solana's been hot lately, but you can truly never fade Bitcoin. Are you a Solana user who wants to get exposure to Bitcoin? Mint zenBTC to get that Bitcoin exposure with yield and some rewards to boot. zenBTC is the first application launched on Zenrock, a permissionless decentralized custody network backed by One Roundtable partners, 10T, Maven 11, and Spartan. Live on Jupiter, ROC is the native token for transactions within the Zenrock ecosystem and secures Zenrock's decentralized custody network. zenBTC is secured by Zenrock Decentralized Custody, and it ensures that Bitcoin holders can securely and seamlessly earn yield on their favorite chain, like Solana. Visit zenbtc.io to learn about earning yield with Bitcoin on Solana. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Okay. And then speaking of the volatility, I cut you off, so I'll let you finish that.
Yeah, the volatility was another component that I had to really wrap my head around, particularly as a former buy-sider. I came from long-short equity where you get rewarded on consistent 10%, 20% returns or whatever have you if you're directionally long fund. And the notion of volatility as an asset, as a weapon, was really foreign to me a few months ago, but I think is something that now I've come to really fully embrace and has obviously enabled MicroStrategy to have a lot of success across its capital markets playbook. So the idea here is that you take an underlying asset like Bitcoin. I'm going to use really simple numbers here just to illustrate this. Let's say it has 60% volatility, and volatility is usually measured. I'll give the nerdy mathematical definition here, which is like you take the logarithm of returns over some period. Right. And then you go and you multiply by the standard deviation of you take the standard deviation of that and multiply by the square root of the number of trading days in that period to arrive at what we would call realized volatility. All right. So Bitcoin has somewhere around a 60% realized volatility. And you would think that a company that goes and just puts all of its treasury into Bitcoin would have somewhere around the same vicinity, right? 60%. And what ended up happening was MicroStrategy's volatility, if you looked at most recent metrics, is somewhere around 120. And you can actually see that with DeFi Dev Corp as well, where it's Solana's volatility is 2x the volatility of Bitcoin, but ours, as you just cited, is somewhere around 700%. And what this does is it opens up a whole new level of demand from a whole swath of different investors. So you start attracting options traders who are attracted to wild price movements and are able to sort of execute on their own trading strategies with it. It attracts convertible arb traders, right, who maybe want to participate in owning the underlying convertible debt instruments, but short the underlying equity on the other side. And really their objective is to monetize volatility. And what this does is this drives more liquidity in the stock. It just drives a lot of activity. And you see this really interesting dynamic where the actual volume traded in some of these instruments relative to their market cap is somewhere around 10x greater than some of the Mag 7 stocks. So it unlocks what I call different flavors of volatility across the capital structure and just gives companies, crypto treasury companies, more options to tap into a number of different instruments. So for us, we took advantage of that with, our 42 million convert, which really got us off of the ground. And then, with private investment in public equity or PIPE for $24 million. And you can expect us to run a similar playbook in the future, again, because all these different investors are attracted to these different flavors of volatility.
Mm-hmm. And so there's, if I'm understanding correctly, there's high demand for DeFi Dev Corp stock when volatility is high? There would be lower demand if volatility goes down for some reason.
Yeah, I think that's a fair characterization. I mean, to some extent, you are going to get investors in this just because they're Sol maxis, right? And they really want the best way to acquire Sol, and maybe they care a little bit less about the volatility, and they're just purely focused on Solana's fundamentals. And like, yeah, this is the fastest way to go and buy this efficiently. And then you have some other end of the market, as you mentioned, that is actually attracted to, more complex trading strategies, and they don't care so much about just like straight line directionality, right? They might go after something like Bitcoin if they just wanted something that was sort of steady as she goes. But they actually want something that's going to like really whip violently around, back and forth. And we think our value proposition at DeFi Dev Corp increases a lot, particularly in the context of Bitcoin volatility being in secular decline. So a stat that really stood out to me and was fascinating was if you looked at Bitcoin's volatility in 2024, it was actually half as volatile as the Mag 7. Like half as volatile as half of the Mag 7 or something like that. It was some stat that basically indicated that, and you'd expect this as Bitcoin goes up in price and adoption goes up and it just matures as an asset class and gets more acceptance, that price go up, but volatility kind of steadily goes down. So a lot of the, I'm going to say, options traders, convertible ARB guys, like people who were attracted to MicroStrategy across various forms of the capital structure, are going to be looking for something else over the course of the next few years to sort of take advantage of those same strategies. And we believe DeFi Dev Corp is going to be able to fill that need pretty well.
The reason I bring up the demand question is that I think some of the criticism around strategy, at least, and like I don't think there's as much out there written about DeFi Dev Corp because it's new, but my understanding is that there's like similar considerations here, but it's basically like, okay, you're able to trade this share above NAV, but that means that investors are buying the stock at more than the value of the underlying Bitcoin. Mm-hmm. And if investors no longer see that as valuable, then like this stock could kind of collapse. And if the convertible bonds mature at a point when like volatility is low and there is no demand, like that maybe creates some obligations to have to like pay back the converts for the buyers.
Look, I would say no vehicle, particularly no crypto treasury vehicle, is going to be completely risk-free, right? When I think about the risks on these though, and you have to be really careful and thoughtful with how you manage your cap structure. And, we believe we're doing that at DeFi Dev Corp. You don't want to end up in some scenario where the price of Solana drops 80%, we're in a bear market, and then getting margin called or something like that. You have to unwind your Sol position. Like, we intend to never sell any of the Solana that we hold. So, what does that mean? That means that, to the extent that we're issuing debt, we have to be able to survive a bear market for a prolonged period of time, right? And really where MicroStrategy probably gets into trouble is not so much if Bitcoin draws down 60, 70%. It's if it draws down and then never goes back up. Right? Like if you were to enter some prolonged bear market, I don't know what would cause that, like some cataclysmic event, geopolitical tension or something like that, in which case like all financial assets are getting hit, right? It's not just Bitcoin unique, but something that creates really depressed prices for a long period of time and something that creates really depressed volatility for a long period of time. And all of us here in crypto have lived through enough bull and bear markets to know that that hasn't happened yet, right? We sort of get these cycles, and I won't comment on this cycle or anything like that, but we obviously don't believe that we're going to enter some prolonged 5-year bear market period, and we just have to be really thoughtful with how we craft our deals to make sure that we don't end up in trouble.
Let's talk about strategy, actually. So
sure.
You can say I go buy MicroStrategy stock at 1.8x the NAV. Mm-hmm. So I've purchased, stock that's worth 1.8 times the underlying Bitcoin. Does strategy have to keep selling equity at above NAV for me to not be diluted? Like say the premium goes to like 1.4%. Haven't my shares and therefore kind of my Bitcoin been diluted relative to if I had just bought the Bitcoin myself?
The true academic answer to this is that the only time that you're getting this accretive dilution dynamic is when you are trading at a premium to NAV. And you're getting a premium to NAV, as I mentioned, because folks are betting on your ability to continuously accumulate an asset that they think is going to go up over time. Now, if investors suddenly started speculating that the asset was going to rapidly decline, you would expect that NAV premium to compress because the underlying, like what I would call like earning stream paid in Bitcoin, would be expected to decline in value, even if you were acquiring more Bitcoin, right? And the only way, again, that accretive dilution formula works is when you are issuing at 1x NAV. Now, or above 1x NAV. When you get to 1x NAV, you're able to lean on other structures, right? Like convertible debt offerings, again, to the extent that you are not doing really dumb things from the risk management side to ensure that your company doesn't blow up. So to illustrate this, like capture the spread dynamic, I'm going to make up a crypto treasury company here. Let's suppose you have DK Holdings. All right, 10 shares of DK Holdings in the market, trading at $10 a share. So you've got a $100 market cap in DK Holdings. And let's say they have one DK coin token trading at $1. So I've got $1 worth of this thing. I've got a market cap of $100. I'm not going to assume any cash or debt to money the equation here. So you're trading at 100x NAV, right? $100 market cap versus $1 of this thing. Now let's say, and I go and I issue one share of DK Holdings. So now I've got 11 shares. I net $10 from it because each share is trading at $10. And I immediately go and I buy $10 worth of DK coin. So I now take my DK coin holdings from, what did I say, $1 to $11. On a per share basis, I went from 10 shares to 11 shares. I go from like 10 cents of DK coin to $1 of DK coin. On a per share basis, the underlying asset, I've gotten 10x more of that. And my NAV premium compresses naturally too. I can go from like 100x NAV down to 10x NAV. That's what we call capturing the spread. That formula, again, only works when you are at a premium to NAV. And what you would find is that dilution will only occur if for some reason you started doing the opposite. So if you started issuing shares below NAV or something like that and trying to go and accumulate more of the asset, of course, you're going to end up in trouble. But I think that's why Saylor has leaned more into debt as the NAV premium is compressed and more into equity as the NAV premium is expanded. And we expect to do roughly the same thing at DeFi Dev Corp, but we think we can be a little bit more innovative with some like on-chain TradFi crossovers that we have nothing to say on right now, but TBD.
Mm-hmm. And that gets a little bit into like what I think what Saylor would call like the Bitcoin yield, which is that you're going to increase the amount of Bitcoin per MicroStrategy share over time.
Yeah.
I think you guys have talked about a similar thing of even like it's something along the lines of like the executive comp is tied to like increased SOL per share or something like that.
It is. Yeah. And I think we were very thoughtful with how we did that comp structure because I think you've seen some treasury vehicles come online that, you know, reward their execs on market cap or other metrics or whatever have you. And in theory, they could just dilute their shareholders all the way to infinity. And we wanted to, you know, really create some kind of structure that rewarded growth on a per share basis and rewarded really thoughtful but fast NAV growth on a per share basis, in this case, Solana. So you can even see over the last month, we've gone from, you know, we're today at 0.295 SOL per share, and versus just a month ago, I was at like 0.11 SOL per share. So almost 3x growth. And, you know, we've done that very, very thoughtfully in such a way that I think, a lot of investors are coming around to the fact that we're not just trying to increase the raw amount of Solana on the balance sheet, but make sure that each individual DFDV holder is getting more SOL on a per share basis.
Mm-hmm. Okay. And that Solana per shares increase depends on the equity trading above NAV, right?
It certainly helps, right? And I think that it's helpful, you know, for the ATM example that I most recently gave. But look, if we got to 1x NAV, and I expect that we could get to those levels in a bear market, that is entirely possible. We would just find other ways to accumulate SOL. You know, we have the benefit of an underlying validator business that is, you know, obviously very cash flow positive and has really high incremental margins, has roughly like average of 500,000 units of SOL delegated stake. That does not include the potential like 4.5 million SOL that we get from our partnership with Kraken that we've announced. And you can imagine there are other partnerships in the works. And we intend to just like wash, rinse, repeat with that, right? And use that to help us accumulate more Solana. In many ways, it's like a better vehicle than what you see with some of the Bitcoin treasury companies. Like MicroStrategy's core software business doesn't help them buy more Bitcoin, right? It's just kind of sitting there versus like our underlying validator business really helps us acquire more SOL. So yeah, I think that's one element to it. And then the other element, like I said, is just leaning more into the converts as we get closer to 1x now.
Mm-hmm. Gotcha. Speaking of, I guess, the strategy to DeFi Dev Corp, and there's a couple others. There's Sol Strategies. There's Upexi, however you say that.
Yeah.
And I believe like more coming to market or just like smaller ones that aren't talked about as much. It's a popular playbook right now. And I think there's like a couple interesting comparison points. One just being that my like, mid-curve understanding of like, okay, why is MicroStrategy trading above NAV largely centers around Michael Saylor as this kind of like crazy guy who's just going to go out on, Bloomberg and say insane things about Bitcoin. And like, you just have this like relentless Bitcoin bull and people sort of like him in the Bitcoin world. And so that is part of how he's able to convince the market to purchase equity above NAV. I don't really think any of the existing Solana MicroStrategy equivalents have like a Michael Saylor equivalent. I mean, maybe it's
You
UDK,
clearly have not seen the Solana Jesus shirts and things that we're contemplating for various conferences.
Oh,
that are
really?
going around
Okay.
Twitter. Yeah, Joseph is our Solana Jesus.
So is that the goal? So Joseph's the CEO. Is that the goal to like turn him into a Michael Saylor-esque figure?
I don't know. I don't think so. I think so it's an important point that you've actually brought up, which is storytelling and getting your narrative out there and being really clear about the narrative is a crucial component of these different treasury vehicles, particularly because you have to capture a lot of mind share. And we really think that, we need to be good storytellers of, not just our playbook, but Solana more broadly. The same way that Saylor has been such a proponent of Bitcoin. He has so many like memorable lines, right? What's the line he used?
Doesn't he have the like, take a mortgage on your house to buy more Bitcoin?
Yeah, exactly. It's
one I always think of.
He's so good. And, look, the approach we're taking, because again, we think it's an important component to the story and making sure that we capture the right attention is just getting all of our team members out there to tell the story. And we all have different styles of telling it. Like, I mentioned Joseph as Solana Jesus, but he's just like one of the most unique characters in crypto that I've ever met in my career. I got to know him really at Kraken when I was there over the last 3 years. And what struck me was he's just very, very direct, very chill, but he's got these like quirks to him that are so unique. I've mentioned this on one of our Twitter spaces where the guy starts off each day with like a giant bowl of vegetables. Like that, that's like just a meme at this point. And I remember I asked him, I was like, hey man, like what's in your like bowl of vegetables? And that sounds like really good. And instead of just saying like a normal person answer, like, oh, I saute some mushrooms or whatever have you and throw in some asparagus, I'll send you the recipe. He goes and he just says, it's 100 grams of broccoli, 150 grams of shiitake mushrooms, 1 gram of ginger. Like I read off every single one. And I was like, yeah, this guy's different. This guy's just, so he's got his own way of telling the story. And I think, what's cool is all of us at the company are really ideologically aligned. So, when we go and we tell the story, we're not in it just to, we're not crypto tourists. We've been involved in many market cycles. We've been in crypto for many, many years. Joseph and Parker for combined over 2 decades, right? I always tell people I'm the relative crypto noob in the room, which is a very rare thing for me to say, particularly when I'm among like, my more TradFi circles or whatever have you. But that storytelling component is just so powerful with these guys because they truly believe in it. And Joseph will be the first to tell you like that he's been working on individual liberty for the last 20 years, which I think is just a powerful message. So
in the initial press release or whatever for Janover now, DeFi Dev Corp, it said like we're pivoting to a digital asset treasury strategy starting with Solana. So is
good catch.
Yeah, it's my job to notice these things. Is there a world in which, say, Solana volatility dries up and you start buying Bitcoin or Monad or like I don't know?
Yeah, it's a good question. Our sole focus is Solana. So even though we had that language in the press release very deliberately, which is to say that, yeah, in like some world where Solana blew up and the fundamentals rapidly shifted or something, we would probably still keep this vehicle the same for, just the sake of staying true to our mission of accumulating as much SOL per share as possible. And you can imagine in the future there may be avenues where we decide to do a different treasury strategy, but keep that vehicle very separate from this one. So we have nothing to say on that right now, just given that all of our focus is on SOL. But stay tuned in a few years. You never know what happens.
Mm-hmm. Yeah. Well, and I think that opens an interesting door here because, like, with the Michael Saylor comparisons, he's like a Bitcoin maxi.
Yeah.
And his thing is kind of, nothing else is worth anything. It's Bitcoin or
there is no second best.
Exactly.
Yeah.
And so, like, do you see SOL as like a long-term store of value asset, or like what is the reason that you've chosen to be SOL exclusive, I guess? Or?
Yeah, I think everyone at the company would actually give you a different answer for why they're bullish on SOL. So for me, look, there's sort of like I'm going to say like fundamentals that I think everyone's very familiar with, which is, growing developer activity, very high speed and latency and things like that. And we obviously think SOL has a pretty good chance to flip Ethereum even this cycle, just given where the fundamentals are headed. A stat that stood out to me, which I thought was so cool, was that Solana constituted somewhere around, in this most recent quarter, like 40% of all DEX volume was on Solana. And actually on an absolute basis, like SOL volumes were up Q1 versus Q4, while industry spot volumes were down like 12, 13% or something like that. So those share gains are, they're very real. You don't have to like make them up or imagine them or anything like that. I actually got bullish on SOL because of memes. You can't tell from my hat. And I became really fascinated by the idea of memes largely as financial rebellion organized around these like really unique, quirky communities or whatever have you. So like a stat that stood out to me, this maybe gets a little bit to Bitcoin and store of value, but I think I'll come back to the meme component in a second, was that like if you look at from 2006 to today, and you isolated the top 10 central banks and looked at their balance sheets, the balance sheets are up somewhere around like 5x. Right. I think you went from like 6 trillion of assets to 30 trillion of assets. Only 10 or 15% of that was in response to the great financial crisis. All right. Think about that, right? Like the greatest financial crisis of our lifetime or whatever. And only 10 to 15% of that asset expansion happened in response to that. And Bitcoin was obviously like created for that, I guess what you would call that little blip, back then. And, in my mind, meme coins are just these like really fervent, passionate expressions of a system being broken. Solana is no stranger to meme coins. So the extent that you're capturing all that attention, many ways, if you're bullish on memes, you should be bullish on SOL. So yes, all those underlying reasons I mentioned before are why I think DeFi Dev Corp certainly backs that as an underlying asset. Me personally, I would say I'm bullish on SOL for many reasons, but memes are certainly one of them.
Is DeFi Dev Corp sort of like a different expression of that too? Because I feel like like the MicroStrategy has flipped the way we maybe traditionally think about stocks. Like you value them on some price to earnings multiple, and like the value of MicroStrategy comes more from the financial engineering, innovation, whatever you want to call it, that Saylor has pulled off over there. So there's something like meme coin-esque about the way that DeFi Dev Corp is valued too, right?
I would say meme coin-esque in community, meme coin-esque in terms of community, but certainly not just randomly speculative, right? I often get asked, if volatility is the playbook, why didn't you just choose like Doge or WIF as your central asset for your strategy? And I think the reality is that you need an asset that obviously has like the unique combination of fundamentals where you can believe in the price and you can believe in the volatility. You sort of need the like unique combination of both. And the reason why I say DeFi Dev Corp is meme in community, but certainly not meme in execution, is because, again, you have to be very, very thoughtful around capital allocation, being disciplined with how you structure the different raises that you're doing. And, one differentiator that I think will arise for us and maybe several other crypto treasury vehicles, but one that we've taken very seriously, is how do we become the most shareholder friendly crypto treasury vehicle out there? So if you look at our website, we've actually got very similar to Microstrategy, like, metrics on NAV and our current Solana holdings and things like that.
That was really nice.
Right? So yeah. It's like just very easy to access, like cheat sheet or whatever have you. And we think that's just phase one, right? Like that's obviously important for transparency and whatever have you, but we think there are, potential structures that we could contemplate to become even more shareholder friendly. An example that Joseph gave in an interview once, not currently on our roadmap, but it could be something that's really cool, is like, imagine if your crypto treasury vehicle goes below 1x NAV for a moment. So your equity value is actually less than the crypto holdings you have. And imagine if shareholders could go and redeem their shares for the equivalent Solana per share, right? Now suddenly you're like, oh, there's this like other component that not only supports you from a valuation mechanism, but like we're there to tell folks, hey, for some reason, this thing really, like, for some odd reason dislocated, you can go and redeem your SOL per share. Now, again, not currently on our roadmap, but there are lots of shareholder friendly things that we think are going to be important for these vehicles going forward. And I think that's going to be something we have to give a lot of thought to and be, really strategic with.
Interesting. What's the consideration with if the shareholders have the ability to claim their SOL? Like, does that could that present risks to SOL the asset, or like I guess just then the shareholders holding the SOL, so it's not necessarily.
Yeah, I don't think it necessarily
sales.
presents risk to SOL the asset. Often get asked the question, like, if you trade below NAV, does the whole thing break? Do you buy back your shares? Do you sell Solana? And I try to make it clear, no, we intend to never sell our Solana. Like, it's a permanent accumulation vehicle for a reason. But the good news is that, unlike strategy, we've got an underlying business. Like, the core Janover business was obviously valued by the market in some capacity before we took it over, right? Call it a couple $1 million of consideration there. It's obviously will become sort of smaller and smaller as time goes on and we accumulate more SOL, but it's still there. And then, the validator business obviously provides some kind of support to NAV as well. Even if you were just strip out our Solana holdings, you would assign some value to those components of the business, which we think are, again, pretty important and crucial, particularly the validator side, which is, again, cash flow positive.
Mm-hmm. I guess this maybe speaks to a good broader question, is like, is there a world in which you would be forced to sell your SOL? This is something I've been at dinners where we'll debate about MicroStrategy. Like, obviously, like, if the stock collapses, that doesn't necessarily mean you're like selling all of the underlying SOL. But is there a world where that would happen?
Yeah, I think this goes back to the earlier point, which is you would need some really prolonged bear market where the volatility is so low, and or maybe we decide, hey, we've got to just go and do another asset with this vehicle right now. But again, our intention is to just keep this vehicle focused on SOL and then do other assets with another one in the future if that's what we decide to do. But no, I mean, you can imagine the NAV premium will compress in a bear market, and hell, a bear market's going to be a really great time for us to buy more SOL. So we have no intentions of selling.
Solana's been hot lately, but you can truly never fade Bitcoin. Are you a Solana user who wants to get exposure to Bitcoin? Mint zenBTC to get that Bitcoin exposure with yield and some rewards to boot. zenBTC is the first application launched on Zenrock, a permissionless decentralized custody network backed by One Roundtable partners, 10T, Maven 11, and Spartan. Live on Jupyter, Rock is the native token for transactions within the Zenrock ecosystem and secures Zenrock's decentralized custody network. zenBTC is secured by Zenrock Decentralized Custody, and it ensures that Bitcoin holders can securely and seamlessly earn yield on their favorite chain, like Solana. Visit zenbtc.io to learn about earning yield with Bitcoin on Solana. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Okay, getting back to like SOL as like a store of value, or however you want to look at it. It's been obviously an incredible year and a half for SOL price action. Mm-hmm. For like the kind of 9 to like 300, I think was the peak in less than 3 years thing is pretty remarkable. I do think though there's like a world where long term the market maybe doesn't value Sol the asset quite so highly as like the applications built on top of Sol or something like this because I don't know, like I'd probably get outclassed in a debate about this, but like essentially like you're paying for security with Sol and that's kind of the underlying value of it. But perhaps Sol's overpaying for security, something like this. Like, so I don't know. I guess, how do you think about the long-term value of Sol, the asset?
That's a good question. Look, your guess is as good as mine, right? I think if you had told me that, like, so I got involved in crypto for the first time back in 2013, but didn't go very deep into Bitcoin or anything like that. It was really 2017 when I started getting heavily involved in crypto. Like a good friend of mine in high school started pitching me on ETH. So then like every paycheck I was just buying as much ETH as I could, right? Like very aggressively. If you had told me back then, and even back in 2021, that ETH would be trading where it is right now, I just wouldn't have believed it.
Yeah.
Right. So that's why I say your guess is as good as mine. Is like a lot can obviously change over the long term. But you know, one of the cool parts about choosing Sol for the Treasury strategy. So we've talked about the volatility, we've talked about the underlying fundamentals, is actually like we call like the price reflexivity. So we're long-term Sol bulls, but again, your guess is as good as mine as in terms of where this thing ends up 4 or 5 years from now.
I think there's like a world in which you can be right in the short term and wrong in the long term. Like,
yes, yeah.
Sol currently is valued by the market. It may not be in 10 years, but it is right now, and that's kind of like the way that businesses and investing works.
Sure.
So like maybe there's a different crypto asset you buy down the road or something like that. I think there's also, like, this is a side tangent, but I think there's an interesting conversation about how like everyone who was early to Bitcoin was right, but kind of for the wrong reasons. Like, I don't think Bitcoin ever became how people initially envisioned it.
Right.
And especially with a major price catalyst being like a friendly US regulatory regime. That would have never been like an early Bitcoiner kind of take.
Right. Yeah, that's so interesting to think about.
It's Christopher Columbus-esque. You were like, you got there, but not for the reasons you thought you did.
Yeah, exactly. That happens a lot. Back in my long short equity days, that would happen all the time. It's like you get a stock pitch right or something pops on earnings, and you're like, I told you I was right, and your PM goes and reprimands you because you're like, it was completely for the wrong reason.
Exactly.
So, yeah, that could totally happen.
There's more respectable reasons to be wrong, I guess. So
yes.
Like trading meme coins. Speaking of this hat, by the way,
yeah.
Do you get like noticed in public? We're in New York. Like, are people like, hey,
I'll occasionally get a nod or something like that. It's really cool because you don't have to say anything to the person. They're just kind of like, yeah, nice hat.
Yeah,
thanks.
I've never seen one in the wild. I should get a.
I thought it was really important to get one. So a backstory here. I, like many, like saw the initial headlines on WIF sort of in I guess it would have been late 23, early 24, somewhere around there. At the time, my dad had 2 twin girls. At the time, my girls were like,
that's awesome,
8 months old or something like that. So we're deep in the trenches, sleep deprived or something. And I see this thing pop up on my feed, and someone on the corporate strategy team at Kraken was like, dude, you got to check this thing out. You've got to, like, I think this thing's like a real deal meme or whatever. And I was like, okay, I'll buy a little bit of it and see what happens. But because I'm so sleep deprived, I don't even like think about it for a little bit, and I see it surges and I'm like, oh my God, I've just got to sell everything I have, or a large chunk. I traded it too much. Story of like my life in crypto, I guess. But I actually went and I messaged Joseph about it, our CEO at DeFi Dev Corp, chief strategy officer at the time at Kraken. And I was like, hey man, you should check this thing out. And he was like, what is this? I was like, dog with hat. He's like, no, but like, what is it? I'm like, dude, I've just told you what it is. And he's like, I'm not touching this shit. Like, get this away from me. I'm like, yeah, but you're either with us or against us. And he's like, you are coming at me with dad jokes right now.
Yeah.
Really, I'm good. And then about a month later, he messages me and he's like, my wife just asked me what WIF is. You should, he's like, I really wish I had just bought the thing or whatever. So, my kids actually even have a couple of these, which is, kind of cool. A friend of mine was, who knows I'm deep into crypto, thought my kids would appreciate it too.
Yeah, it's kind of, there's like something intangible about like what makes a meme coin work. And we had a old producer here who's no longer here who just like had an eye for like, okay, dog with hat is funny. I can't explain why, but there's something. Same with like fart coin. It's so
Yeah.
stupid, but it was also really funny, and it became one of these huge meme coins.
Well, the thing that's refreshing for me about these things, and we spoke a little bit about this with crypto being like peaceful rebellion and folks rallying around these different communities, is I think there's one take which says like financial nihilism is everywhere these days in society, right? You can look at another stat I give people is like 0 day to expiry options trading. So literally people just like flinging lotto tickets around in the stock market. Somewhere around like 51% of all S&P options trading in Q4, right? Like 51% was 0 day to expiry. US gambling revenues are up like 7x over the last few years. Like if you look at DraftKings user numbers or something, it's up like over 10x in a 6-7 year time period or something. So this tells me people are like, I don't know, maybe you've got like a few thousand sitting in a bank account or something, and you recognize if I earn some single digit percentage on that, it doesn't help me buy a house. It doesn't help me get, afford groceries any better, because fiat is just inflating away like crazy. And meme coins are these like really just passionate protests against that. And they don't take themselves seriously or pretend to be something that they're not. So I'm a big proponent of that, actually.
Interesting. I've never really been able to like come around on it, because I understand the financial nihilism, but like you also lose money on the meme coin. So it's like responding, like yelling at the world by losing money on these things.
You do. It's pure speculation, right? And again, it's why DeFi Dev Corp didn't choose a meme coin for its crypto treasury strategy. It's important to choose something that has, good volatility for all the financial engineering that you're going to do as a crypto treasury company, but also that has like really solid fundamentals that you can point to and feel comfortable about.
Yeah, I think my hope for a lot of these things is that like capitalism can be useful. I think that's a cure to financial nihilism, maybe, is like real technical innovation, like giving people and like, I mean, from in the US context, like we have these amazing tech companies, and you can invest. A lot of times you can't, which is a problem that crypto should like address with like private equity access, maybe. But like you can invest in some of the best companies in the world and get access to that upside. And I think Sol, like that's why I wish Sol would focus less on meme coins a little bit. Is it's like you've created this really cool tech that can do these like really almost magical things in terms of coming to consensus so quickly and like permissionlessly creating capital formation. And so I think a lot of people think that meme coins are like a stress test that will lead to more serious use cases, but it's kind of sad if it never does, because it's like, okay, we have the kind of incentive mechanism of capitalism, but we're applying it to really meaningless things at the end of the day, as opposed to like, I don't know, DPIN or like things that affect the world of atoms over the world of bits.
Yeah. Well, I mean, as I mentioned previously, there is still so much to Solana, obviously, outside of the memes. I have a few friends who are like, no, it's like this negative net sum, it's value destructive, the meme stuff. And I'm like, yeah, but you're ignoring like all the other activity that's going on in the space. And, I'm really compelled by what you said, which is like, capitalism is a force for good or whatever. And it's like, one of our taglines early on was this idea of bringing potential like DeFi returns and innovation into TradFi, and bringing TradFi capital into DeFi, and like really being a good link between those two worlds. And it's something that we're really heavily focused on at DeFi Dev Corp.
Mm-hmm. One of the, I guess, more like technical things you guys do is you just announced that you, I believe, acquired a validator business or have launched one. Maybe just like walk me through what you're doing with the validator business and the unique, like the unique angle that gives these like Solana Treasury play companies that are doing this, as opposed to just like MicroStrategy.
Yeah. I spoke a little bit about this. So we acquired a validator business for $3.5 million. As I mentioned, it has about average of 500,000, delegated stake. It's more than that now, but on average, that's where it sits. And I think it unlocks two pretty important things. The first one is, as I mentioned, there's like this support to your like NAV multiple that arises from having one of these things on there. Why? Because it's a like very cash flow positive business that you have, market's willing to assign some kind of value to it, over the, both short term and long term. And it actually helps you directly. It's very synergistic with the Treasury accumulation strategy itself. So, again, Microstrategy's core software business doesn't help them buy more Bitcoin, but our validator business obviously helps us accumulate more SOL. So that's an important element to understand. And the second piece I think that this unlocks is just a whole swath of partnerships whereby, I'll give a concrete example. When the SOL ETFs, do come to market, won't be staking on day one, but eventually there will be. You can imagine being a like very trusted, reputable validator in the space enables us to potentially secure delegated stake from, the ETFs or other institutional providers. And you've seen one such example of a partnership with a partnership we announced with Kraken, whereby again we can secure up to 4.5 million of delegated stake. And you should expect that we're going to go after more of these partnerships across the space. We also had one, this morning announced with Bonk.
Mm-hmm.
Where
I did see that.
Yeah, so that's again, we don't intend to put Bonk on our balance sheet. We're staying very, very true to our North Star of just SOL and SOL per share. But running our own validator infrastructure is really important to supporting the ecosystem more broadly.
Does it let you be involved in things like governance or like just more like core decisions about the network, or are you going to stay out of that kind of stuff?
It's a good question. I don't know if we've actually publicly come out and stated our position on that. I'll probably defer to Parker on what he would have to say on it. But again, we like to think of ourselves more broadly as big proponents of the ecosystem, and to the extent we can actively participate, it's obviously great to have that optionality.
Mm-hmm. And speaking of ETFs, I think there's an interesting conversation to have here, which is when I first chatted with the DeFi Dev Corp, the Janover back then guys in April, I kind of brought up the point, like, this is a way for investors to get more like regulated, easy exposure to the price action of Solana. So, which is like a classic pitch for ETFs. That boomers maybe don't want to fire up a Coinbase account and put a lot of money into it or something like that. And I was like, okay, so like, what's the value of Janover when ETFs get approved, and especially if staking ETFs get approved?
Yeah. And
I forget who it was, but they were like, well, yes, but like MicroStrategy's stock went way up after Bitcoin ETFs were approved. So clearly it's not, ETFs are not the like Treasury play killer. And in some senses, you could argue that the Treasury play is a superior way to get access because you can stake all of your SOL and things like this.
Yeah, it's speed of accumulation. It's the staking component, as you mentioned, right? And there's sort of like,
because if you're an ETF, you need to be able to redeem those shares.
Yeah.
You need some that's.
One way that I've illustrated this for people actually is like, if I went and I bought one unit share, if you will, of a SOL ETF, and I just did nothing with it for a year or 2 years, I'll get the price action of Solana, right? That's what the ETF is designed for. I'll get that 1-to-1, but the buck kind of stops there, right? And maybe, yes, like you said, like staking eventually gets approved and maybe I get some yield on it. Versus if I buy one share of DeFi Dev Corp, let's say you earned one share of what was Janover a month ago and, is now DFDV, a ticker DFDV. You're actually getting more Solana, even if you buy no more shares in the future, right? You just buy that one, you're getting more SOL per share over time. Like it's like a permanent accumulation vehicle, which is fundamentally different again from an ETF, from a just pure fundamental standpoint, right? Versus, and also like ETFs charge fees, right? So that's like another thing that sort of eats away into your effective like per share holding. The other piece that I think is important that we've touched on a little bit earlier is just the utility of the underlying instrument. So it's not just that we're growing SOL per share, but we're offering all these different flavors of volatility across the cap structure, right? From the converts to potential equity and pipes and things like that. And eventually, we don't have options on our equity today, but stay tuned. That's obviously something that's pretty important. all these things that are pretty crucial. And if you look back in, what was it, January of 24, when the ETFs came to market for Bitcoin, you didn't have options on them on day one, right? So and the value proposition for MicroStrategy actually increased because people recognize, oh, this is a huge validation of the space. We're bullish on Bitcoin. Oh, but by the way, the options volume exploded on MicroStrategy post ETF approval because there was just all this stuff that you could do with the underlying volatile MicroStrategy equity.
Mm-hmm. Yeah, I think it's interesting because Bitcoin ETFs were obviously they kind of set off the ongoing Bitcoin bull market back in, what was that, 2024?
Yeah, early
late 2023. Yeah. Right at the beginning of the year. I remember that. And I think we have this tendency as people to just think that history is always going to rhyme, but sometimes it doesn't. And I think there's a world where the approval of Solana ETFs actually is pretty has pretty minimal price impact on Solana, because you already have now several different options to invest in a regulated way through these treasury holding companies. And if you believe in the kind of NAV play Solana per share vision, it's superior in some ways. Another point you didn't mention is if you run your own validators, you don't have to pay Coinbase's validator fees, which are pretty high.
Right.
Maybe not as high for institutions, but it's still something. And obviously you pay no fee on your own validator. So
I have a hot take, which is in some ways, I actually feel like the ETFs don't need to exist anymore. In January 2024, they definitely needed to exist because the regulatory regime was just so different. We were living in a completely different world. And then you fast forward 10 months, right? And all of a sudden you've got Trump elected as president. You've got the most pro-crypto Congress, in existence. And, that just creates a completely different world for institutions who are obviously seeking regulatory clarity and maybe finally had line of sight to a different crypto regime, right? And the reason why I say the ETFs don't necessarily need to exist is who wants the life raft floating down the river when you can get the speedboat and get to your destination faster?
Mm-hmm. Interesting. Withdraw the applications, everyone. You heard it here first. No, I do. I just think that, Solana ETF news, just in media, there was a lot more interest from readers around it late 2024, something like that. Or even over the summer as those applications went out, the Biden SEC rejected the 19B4 filings.
Yeah.
Now I don't know. I think it's priced in that these things are going to get approved in 2025. And even if staking goes live, I just don't know how popular the vehicles will be. You also see this with Sol futures ETFs trading has not been super inspiring.
Right.
From an inflows perspective. I want to ask about, you've alluded to a couple of times throughout this conversation, the velocity thing.
Yeah.
And I do think that's a notable thing about DeFi Dev Corp is you raised this money via debt, I believe, and bought Solana really quickly. You already are over 100 million in holdings 2 months in. Mm-hmm. How does that scale, I guess? The velocity thing I would think can't last forever, but what's the long game?
Yeah, I mean, purely definitionally, the denominator is getting bigger. So the growth rate is going to slow over time, but we still want to go full pedal to the metal on something like this. What's interesting is if you look at our total capital raised, so $42 million of converts, $24 million pipe, at a pretty steep discount to prevailing market prices, but markets seem to understand this accretive dilution dynamic. But you look at the value of our Solana holdings, right? So 66 million total capital raised, run a little bit of the ATM. You can kind of back into that as well. But we've got $105 million worth of Solana. Now, some of that is price appreciation. Another pretty important component to this story is our ability to acquire discounted locked SOL from players like BitCo. We announced our partnership with them a few weeks ago. And it does a couple things. One, speaking of your ability to go and buy spot Solana versus investing in a crypto treasury vehicle, the average user does not have access to discounted locked SOL or deals via OTC and things like that versus, we obviously do. And the second component is our ability to lock in almost immediate unrealized gains for DFDV shareholders via this vehicle. So, I think we've locked in somewhere around on average, like, 31% unrealized gain, maybe a little bit, less than that for DFDV shareholders via, these discounted locked SOL, acquisitions. So, there are lots of, I think, like, creative crypto native ways that we can go about this to, really scale this strategy over time. And, I alluded to some like on-chain and TradFi innovations that we're going to be working on. Again, nothing to announce today, but stay tuned. We think there's a lot of different ways we can really keep our foot pressed to the pedal.
Where does this locked SOL come from? Is it like FTX's stake?
Yeah. So think of stuff that's recovered from bankruptcies or like early VC investments, stuff that obviously can't be transferred on chain until the lockup period is up. That locked SOL we can't obviously like stake to our own validator and until it vests accordingly. But we can leave it staked elsewhere if need be.
Okay, interesting. Yeah, that's one that I'd seen as well that I thought was like an interesting point.
Yeah, that's one component. I would tell you the other piece that I hear about scaling over time is going back to the subject of volatility. Like I think most investors really like the idea of low vol because it's almost like going to San Diego where the weather is like 72 and sunny all the time.
Yeah.
You don't have to worry. Like I lived in LA for many years and I remember I didn't have to worry about like, I could just go in t-shirt and shorts and flip flops no matter what. Right. And then I moved, back to the East Coast a couple of years ago and all of a sudden there's rain, there's snow. And I'm like, that's conceptually how to think about volatility if you don't want to go through the whole like logarithm of returns formula and stuff like that. But the interesting thing with, using the weather analogy is that yeah, the weather in San Diego is nice, but you can't really grow crops if you don't have rain, storm, wind, and like all this other stuff that goes into it. So you need that for growth. And it's one of the things Michael Saylor talked about at Strategy World a couple weeks ago, where he was like, all the wealthiest people have volatility. They love volatility. They don't apologize for it. Jeff Bezos, all those guys, like they had to deal with volatility their whole lives. So pushback I get is like, well, volatility, if you're going to stick with the weather analogy, like, I don't know, a hurricane could wipe you out. Like what happens to a vehicle like yours if you go after some, if the volatility just gets too out of hand? And I always tell people like volatility on its own is not inherently dangerous. It's when you build something that is too fragile or that hasn't been done very thoughtfully. So if you go and you build a very flimsy house in a hurricane, like your house is going to get wiped out. But if you're prepared for it, you build solid foundations, you've got something in place the right way, you're going to be in it for the long haul. And every hurricane season, every 4 years in crypto land or something like that, you'll be ready to deal with that. And that's what we built, is not just a speedboat that can get to the destination really quickly, but that can really ride with the waves and withstand them.
Interesting. That was a journey. I think that was most of what I wanted to cover with you, Dan. I guess last question before we get out of here, to maybe summarize a lot of things. When you buy a company's equity, you're buying like a piece of ownership in that company. There's like these like strategy like plays can be a little confusing. So when folks buy DeFi Dev Corp stock, what are they buying? And you cannot say speedboat.
They're buying the most efficient way to stack Solana. And the tagline I always tell people is, if Microstrategy showed what's possible with crypto treasury vehicles, DeFi Dev Corp is here to show them what's next.
Bottom line, Dan Kang, thank you so much for joining us today.
Thanks so much, Jack.
Thank you everyone for tuning in. Please like, subscribe, 5-star, wherever you get your podcasts. It's been a pleasure, and we'll see you again very soon.